So today, we're diving into the Genius Act of 2025. It's a new bill officially called the Guiding and Establishing National Innovation for U.S. Stablecoins of 2025, and it's making waves in the digital currency space. How's it looking so far?
It's pretty much the government's attempt at putting some order into the wild west of stablecoins, right? There's a lot of buzz about stablecoins in the crypto world, but not all of it's positive. A lot of companies have been issuing them without oversight. This act wants to change that by putting in some concrete regulations.
Exactly. So stablecoins, essentially digital currencies that are supposed to be pegged to the US dollar, have been growing in popularity. Think of it like a digital version of cash, but until now, anyone could issue them without much regulation. This bill seeks to tighten that.
Yeah, one of the key parts of the bill is that it limits the issuers of stablecoins to just three types of companies: banks or their subsidiaries, federally approved non-bank issuers, and state-approved companies, but with a $10 billion cap. So no random tech startup can just jump in and start issuing stablecoins.
Which makes sense. The idea here is to make sure only serious, regulated institutions handle these digital dollars. Imagine if anyone could just create a currency that you could use to buy stuff online or send money internationally. It'd be chaos.
Right, and this also ties into the $10 billion rule. State-regulated companies can issue stablecoins, but only up to that limit. That's designed to prevent smaller, less regulated entities from becoming too big to fail and then crashing the market if they go under.
A safety net, basically. And speaking of safety, this bill also requires issuers to maintain a one-to-one reserve for every stablecoin they issue. So, if a company issues 1 million stablecoins, it must have $1 million or similar assets in reserves.
Yeah, that's a huge deal. Right now, there's nothing stopping issuers from, say, making promises they can't back up. This rule means the issuer actually has to prove they have real money to back up the digital dollars they're offering. Transparency is key here.
And the companies have to disclose their reserves publicly every month, too. So, anyone who's using these stablecoins can check and be sure that the money is actually there. It's like checking your bank statement to see if your savings are still there.
Exactly. No more guesswork. And one more thing that stands out: if a stablecoin company goes bankrupt, holders of stablecoins get priority in claims. So you're first in line to get your money back before investors or creditors.
That's a nice touch. It gives users more confidence knowing their money's protected in case things go south. And it's kind of like FDIC insurance for digital money, which is reassuring.
Absolutely. It makes stablecoins feel a lot safer for regular users. But there's more. This bill also clarifies that stablecoins aren't considered securities. That means fewer regulations, which could make using them for everyday transactions a lot simpler.
Yeah, think of it like this. No more paperwork or the hassle that comes with using securities. Stablecoins could be used more like regular cash for payments, savings, or even international transfers.
And that's another benefit. International money transfers are a huge use case for stablecoins. Right now, sending money across borders can take days and involve hefty fees. With the Genius Act in place, using stablecoins for remittances could be quicker and cheaper, with added security.
Take Maria in Texas, for example. She wants to send $500 to her family in Mexico. Without regulation, she'd either have to pay a hefty fee with Western Union or use an unregulated stablecoin that's a bit of a gamble.
But with the Genius Act, Maria can use a stablecoin from a regulated issuer, pay a small fee, and know her money will actually be backed by real dollars. Plus, it'll arrive in minutes, not days.
It's a game changer for online shopping, too. If you want to buy something from overseas, you don't have to worry about the legitimacy of the stablecoin you're using anymore. The Act ensures those coins are backed, and the company is transparent about their reserves.
And for people looking to save, the Genius Act might make stablecoins a safer bet for higher interest. Right now, there are platforms offering 5% interest on stablecoin savings, but they're risky, and people are worried they might disappear overnight. This law makes sure that only regulated companies can offer stablecoin savings accounts.
And even in the event of bankruptcy, you'd still be protected. So you can enjoy the higher returns without the anxiety that the platform might fold.
There are definitely some winners here. Regular people get safer digital money, immigrants benefit from cheaper remittances, and small businesses can accept payments from anywhere instantly.
But there are losers too, right? Unregulated stablecoin issuers who don't meet these strict standards are going to be out of luck. It's going to be harder for shady operators to enter the market and scam people with fake coins.
Definitely. The Genius Act will make it harder for scammers to exploit the market. And it'll force companies to be transparent and accountable. It's like the government's putting guardrails around the stablecoin space so it can grow safely.
It's kind of like when cars didn't have rules before traffic laws. Chaos. But now we can still drive freely, but with speed limits and safety measures. The Genius Act aims to do the same for digital money.
It's a step forward. If passed, the rules could take effect in a year or two, giving companies time to comply. But in the meantime, it's a good idea to stay tuned. This bill could shape the future of digital currency in the US and abroad.
Yeah, it's definitely one to watch. The potential for innovation in payments and remittances is huge, but it all hinges on how well these new rules are enforced.
Well, that wraps up our breakdown of the Genius Act. It's got the potential to really change how we think about stablecoins, but we'll have to wait and see how it evolves. Stay tuned for updates.